So I'm here with Luke Belmar, entrepreneur, founder of Capital Club. Luke, welcome and welcome back to Dubai.
Thanks for having me. Look forward to talking about crypto and what it holds for this year.
Yeah, super excited to chat to you. I've obviously been in the crypto space for many years. You have as well. I think you were in the space since 2016, so even longer than me. So I think we're going to dive today into a lot of the intricate nitty gritty in the market, the dynamics, best coins to buy, where you view the market going over the next few years. So I think it's going to be a great conversation, and yeah, hopefully one people can find a lot of value in.
They will. Let's get into it.
So how did this, and we've already been talking for a couple minutes and we're doing the intro now. How did this all begin for you? Like, where did you originally start off, both in crypto and entrepreneurship, to be where you are today? Because obviously now you're hugely successful. You have the brand, but I'm interested to know how that all started.
Yeah, so I've always wanted to be an entrepreneur. Now, people tend to go towards the business model or the niche that they are exposed to or that they're aware of. When I went to the United States at the age of 16, I started pressure washing basketball courts, cleaning toilets, working at restaurants, but I always wanted to be an entrepreneur. So the first kind of mindset of entrepreneur is like, you know what, let me maybe start a restaurant. That was my thing, right? Like, let me start a restaurant. Then I started researching it. Restaurants operate on 1% margins. A lot of them close down within 2 years. Every single day you have a new churn of customers. So every single day customers have expectations of perfection, right? Which is really hard to maintain. You have food, you have inventory, you have employees, all these things. I'm like, bro, there needs to be a better way for entrepreneurship.
They're hard businesses to run.
Super hard. Passion project for sure, but very difficult. While I was waiting tables, somebody came up to me, one of the fellow servers, and they're like, hey, I've been trading stocks. I made $14,000 this last month. I'm like, oh, fuck, that's fucking crazy. Or made maybe $3,000 a month waiting tables. And I'm like, well, how are you doing it? What is it? He's like, oh, download this app called Robinhood. That's when Robinhood was new because we didn't know anything about finance. So you have this little gamified app. So I was like, hey, this is extremely intriguing. How do I get involved? He's like, read this book, Stocks, Reminiscence of a Stock Operator. I'm like, okay, sounds good. That's the first book that I read about in the psychology of trading. And I was like, okay, this is interesting. A couple weeks go in, I buy a couple penny stocks, a couple of these biotech companies that tend to pump. I'm like, these are shitters. Like, these things are going to do well. It's pretty fun. But I lost money, obviously, naturally. So I go back to my server, buddy, and we continue conversing. A couple of weeks go by, and he's like, hey, have you heard about Bitcoin? Like, what is that? And he's like, oh, it's this digital money. People are getting into it. Pre-bull run, $588.
2016, right?
Yeah. So I go in, buy some Bitcoin, I think it was about 2.5 or 3 Bitcoin, and I sat on it. That was my first exposure to crypto in 2016. But it wasn't my first exposure actually to crypto. Looking back at it, it was my first exposure to the digital landscape, because Bitcoin crypto is merely the money of the internet. It's not inherently separated to the rest of the internet. It's very much congruent. So 2017 rolls around and I get introduced to social media marketing, e-commerce, Facebook ads, and that's how I start my business. 2019 rolls around, I get fully into crypto after the 2018 bull market.
Of course.
I do 160x return, lose it all. I fell into the hodl,
How did you deal with that? I mean, that's a crazy amount of money to make and lose in such a small period.
It was very simple. I was super high convicted about crypto. I said, I need to make more money. Because remember, 2016 rolled around. I came into crypto with $3,000 from a credit card. Yeah. Right. So I was like, I need to reposition myself the next bull run to do extremely well, which thankfully was a couple $1 million because I did well in e-commerce during COVID. So I dumped all of my money into ETH, into XRP, ADA, Tron, in the bear market dump of, I think it was March. COVID was buying Ethereum for like $100. So I did a 40x, put in a couple $1 million, did a 42x on my portfolio, cashed out at a $59,000 Bitcoin, $3,950 ETH.
Wow.
And I exited the bull run. I shorted Luna because it was an obvious scam of 20%. Like, it was imploding, obviously imploding. Did extremely well on that. And then decided to build my personal brand. So I started trading dollars, which was what I made during the bull run, for influence, because I realized, hey, dollars are depreciating. The government just printed 20% of all circulating supply over the last 3-4 years. It's clearly a shit coin. Let me sell my dollars for influence so that then I can take my influence and make more dollars. So it's like a loop cycle. Yeah. So I built one of the strongest personal brands in the entrepreneur space in the world in the last 2 years. And being good at crypto, it has opened up more opportunities for me inside of crypto as well. So this bull run rolled around. Last bull run, we had NFTs. I would say NFTs were probably one of the highlights for me. We had meme coins kind of begin to be introduced. Staking was incorporated. This bull run, it feels like it's a full meme coin frenzy.
Yeah.
And I'm here for it because over the last 2 bull runs, what we've had is all these projects promise utility, promise roadmaps, promise endeavors, promise tech, and 99% of them never deliver. So when I see this random meme coin pop around the year 2016 known as Dogecoin, I'm like, oh, well, what is this thing? 2017. I never bought it because I'm like, this is a shit coin. I'm too bougie. I'm too much of a financial connoisseur to buy Dogecoin, right? Like, why would I buy $100 million market cap Dogecoin? Seems risky. And then it rips to 10 billion. I'm like, okay, well, what is this? And I began to think, okay, well, why are people in crypto? And who moves the markets? Is it utility? Is it a roadmap? Or is it community? Is it people? Is it hype? Is it culture? And it's obviously the latter. So my crypto perspective has shifted from utility, quote unquote, because a lot of Web 2 projects can offer the utility that Web 3 offers, and realizing that the financial infrastructure, the base layer of crypto, the applications that we use, the chains that we operate on, are going to be hard to compete with and hard to topple. So you just build on top of them and take their momentum and build off of the momentum. And memes, in my opinion, are the most halal version of crypto.
So what are some meme coins that you're interested in and why?
You know, so memes represent culture. So you can look at culture, but then you also look at what drives culture, which is marketing and public relations. So there's some things that naturally take off. Your Dogecoin, your Shiba, your PEPE, because they're already ingrained in culture. Nobody thought that Bitcoin was going to take over, but when it took over, other things started to gain attention. In this case, Dogecoin. The next bull run rolled around. People were like, hey, you know what? We're going to need another set of meme coins because we don't want this thing that's worth tens of billions of dollars already. Introducing Shiba, introducing PEPE, introducing all these other ones. Now, another chain rolls around, Solana. You have WIF, you have all these other ones roll around. And then Coinbase says, hey, you know what? The SEC is cracking down on us. I think we should launch a decentralized chain. So they launch Base Chain. Here come all the meme coiners and launch on Base Chain. I bet on Brett. Brett did extremely well. Now you have other chains that are popping up that are doing extremely well, that are gaining a lot of attention, we talked about culture, but they have the other side, which is the marketing and the public relations, which is what you need in order to drive traffic. So you look at MetaMask, okay? What are the 2 chains that are native to MetaMask? Ethereum and Linea. These are the 2. So these are 2 that are going to have great marketing and great public relations because they have money and they have teams. So what do you have on Ethereum? On Ethereum, you have all these different projects that are rolling around. Meme coins are abundant and generous. Linea is a new one that's rolling around. We have FOXY on Linea that kind of represents the mascot of MetaMask. It's a really good novel idea. Has the ability to take off. Then you have Solana. You have Binance Smart Chain, new tokens rolling out there. It really is about trends, teams, and narratives. That's what it boils down to. So you want to be vested on every potential chain. You want to find the winner on every chain because every chain is going to have their meme winner. And then you want to find the teams that have the best public relations and the best marketing. You don't care about dev work. You don't care about any of this stuff because it's a meme coin. So the ones that I'm looking at, Base Chain, Brett, simple. Solana, MPC, because I talk a lot about being an MPC on Ethereum, FOXY on Linea, and nothing yet on the Binance Smart Chain, and nothing yet on TON. I'm still looking at those.
Because you got to wait to see what the winner is as well.
You have to wait to see what the winner is.
Otherwise, you can get in too early sometimes.
But you can predict the winner based off of the public relations and the marketing.
Yeah.
Because those are the 2 strongest indicating factors. So for example, you look at FOXY, how they launched, right? They launched most of all the major exchanges off of day one. $100 million market cap off rip. Really strong team, really strong narrative, really strong marketing. Okay, it makes sense. They need to work on the incorporation of the Linea chain, things like that. But what makes me bullish? The fact that you can buy on centralized exchanges. Path of least resistance. Easy to operate. Are people going to go on Base Chain to buy Brett? Not necessarily. They'll probably go on Bybit and buy it.
Yeah. Or
on KuCoin. It's just the path of least resistance. So once you have these centralized listing exchanges, it's all about public relations, marketing. World's yours for the taking.
There's actually a bit of alpha there. Like, look at the projects. There's like a roadmap that past projects have given you to find tokens that
Yes.
are likely to list on exchanges. So something you can do is play the game of like, what is, just think like an exchange. What are they most likely going to list? Something that's decentralized, something that has a strong team, something that has mindshare and users. Generally speaking, at some point they'll list it if the volume's there. So if a meme coin has great volume, great community, is decentralized and fits the exchange book, you can also pre-position, and that's what a lot of people did with Brett, and then it ran.
And then you need
plus.
to, and then these meme coins need to have enough liquidity in order for you to exit positions. You see these bullshit inflated market caps, but there's enough daily volume traded. There's enough interest in order for you to exit positions. So all the ones that I mentioned are easy exitable positions based off of the liquidity and the demand.
Yeah, people don't think of liquidity. Like new investors, they think, oh, it's 100 mil market cap, or if the 2% depth is $15,000, you can't sell more than like a 10K clip without, nuking price 1 to 2%, and you get crazy slippage. So it's like you gotta factor in liquidity if you're dealing with size, especially.
And that comes down to momentum, and momentum comes down to narrative, and narrative can be built by public relations and marketing. So find the public relations, find the marketing, find the people that have the winning roadmap, exchange listings, partnerships, KOLs, decentralized supply, really fast moving teams, good memes, good graphic design work, good virality and distribution. You'll find a winning meme.
You know why else liquidity matters? I got one more point on this. The big players, the whales, like they aren't trading $10,000, $20,000. They want to get into a meme. They want to buy 5% of the supply. They want to put $10 million in. 99% of memes are simply not able to do that without massively impacting price. So the tokens that do have big exchange listings and a lot of liquidity on chain through the LPs, like these are typically the ones where like whales are almost forced to position themselves there if they want exposure. And like, even myself, if I want to go in with a bigger bet, I'm like limited to a pool of memes. And those are naturally the ones that get the listings that perform better because they're the ones you can enter, like PEPE.
And they have an an upward momentum spiral. Like the more momentum you catch in crypto, you see these charts, bro. They'll go from 100 mil market cap to $1 billion in 3 weeks.
And whales talk as well. Like if you're a whale and you've got $20 million, are you just going to say nothing? No, you're probably connected in the industry. You've probably got friends, partners that run agencies that can bring KOLs in, partners that are at exchanges.
We're running our own Wall Street. That's what happens in Wall Street in the back end anyway. So those are the memes I'm looking at, brother. Those are the things I'm considering, the chains that I'm kind of observing. And all of these projects I think are going to be doing extremely well this bull run.
Yeah, we'll update the audience on our social medias if we find anything.
Yeah, why not? No false promises, no false illusions. They say what they say they are, and they fulfill their duty.
Example?
Exactly. So once again, everything we invest in, whether you invest in a business, your money, your time, your resources into a business, 75% of businesses fail. You invest in the dollar. They can print dollars out of thin air. They can freeze your money. If you don't have it in cash, it's probably in a bank that can be frozen. If it's in cash, you're most likely considered a criminal nowadays. You can't even move it more than $10,000 at a time. You want gold? Perfect. That's a speculative asset. How much has gold actually moved over the last 10 years? Nothing compared to Bitcoin. Bitcoin is the new speculative asset. And as somebody that understands where we are currently in history, I understand that these leveraged ideas and investing your money in risky ways is just naturally where we are in the history cycle. Let me take you back to Weimar Republic, Berlin, Germany, 1940s, pre-World War II. It was degen center. All sorts of sexual depravity, drinking, alcohol, gambling. Why? Why was everything so rampant? Why was there so many prostitutes out in the street? Like OnlyFans. Well, because they realized it's better, I'll make more money than working. Well, okay, why? Because Weimar Republic was inflating their currency and debasing their currency by printing infinite amounts of money. So a currency that lasted 8 years, people don't know that.
Wow.
In and out. Shitcoin. It's a meme coin. So people began to speculate because they realized, hey, I can't hold this unit of currency, so I have to go invest in other things in order to hold my purchasing power. Dude, it's not our fault we're in this business. We've been pushed and forced into this business. I wish this was 1894, where I can go in with you. We're homies. I stop by your house on a bicycle. You get your bicycle. We're 27. We go to the factory. We make $1,000 that year. And in 2 years, we buy a house. And you can actually save the money because they're not printing it. They forced us into speculation. The entire market is propped up by speculation because nobody wants to hold the shitcoin of the dollar. You just hold the dollar temporarily as a unit base because you see it as one for one. The big fallacy and the big scam of the dollar is that $1 actually equals $1 of purchasing power when it doesn't. From 1971 to today, the dollar's lost 99% of its purchasing power, even though it's all still denominated at 1 unit. It should be denominated at 1 penny for the dollar that it was. But they don't do that, right? Because that's the scam. So if you were holding $10,000 10 years ago and you wanted to spend it 10 years ago versus spending it today, you would be able to buy less things. Why? Because they're stealing from you. They're stealing your time, your energy, your attention through currency. So your job is to find an alternative vehicle to preserve your money, to multiply your money, and to preserve it long term. That's why Michael Saylor is bullish on Bitcoin.
And do you have that belief? Is that your belief as well?
Absolutely.
Bitcoin?
Well, Bitcoin is one of these ecosystems. Yeah. It's not the end all be all. It just happens to be the monolithic father that has the brand, the IP, the reputation, the network state to validate
the decentralization.
It's good.
Trust.
Bitcoin
BlackRock.
works. Yeah, everything. Bitcoin works. Is it going to be more in the future? We have the Ethereum ETF, potentially a future Solana ETF, and multiple other projects. Absolutely. But once again, we've been put into the situation by the money printers. So when I tell people, hey, crypto is another vertical for you to get out of the hamster wheel, consider it, I take it seriously.
So where do you see Bitcoin going over the next decade? Or even longer?
I mean, millions of dollars. Because if the US government continues to print money, that money is going to get siphoned and filtered into every asset class. Houses are going to increase in price. Salaries are naturally going to increase. The price of Bitcoin is going to increase. When we talk about $1 trillion market cap stock, like what the fuck is $1 trillion? Is Meta worth $1 trillion? No. But there just happens to be $1 trillion of liquidity in the marketplace that props up the value of that stock. The second scam is understanding how these big corporations collude with banks in order to exit their positions. So when you want to list a company public, you'll go to a bank and say, hey, I have my equities, I have my stock, I have what I own in the company. I would like to turn it into a commodity and sell it in the marketplace. So you get together with a bank, you go through the legal process, and you list your company on a stock exchange. Not just the New York Stock Exchange, it can be London, Hong Kong, anywhere. That is when you start selling to retail, right? So how do you drive up the price of your stock? The same way you drive up the price of crypto, news and narrative. Now, the beauty about crypto is that now more than ever, anybody can interact with it. You can buy if you're in Africa, you can buy if you're in Asia, you can buy if you're in South America. You don't need a credit card, you don't need a debit card, you don't even need a license. DEXs, right, have become super useful. But back to the stock market. They run news, we saw it, CNBC, Kramer, to create what? Liquidity, so that the people that own the stock are able to exit it. The entire creation of the stock market was a way for people to, not the peasants to get involved in the markets, but for the rich people to sell unnecessary and unwanted overvalued stock to speculators. Nowadays, people are realizing that the stock market is rigged. We saw it with GME, we saw it with AMC, and they don't want to play that game anymore. So they're naturally starting to go to other games that hold the actual same level of risk, like crypto. It's the same level of risk. You just have to be investing into the right things. I could take you to a section of the stock market, which is called the penny stock market, and they're $25, $30 million market cap companies. Less than a fucking meme coin. So is that a shitter? A little office in the middle of some strip mall that has one customer that pays them 20 mil a year, and now your company's valued at 40, and it's some shell company, and you just pump and dump through that. Dude, the entire game is a scam. And once you realize it, you don't want to play it. You want to make your own.
I think that's why the Bitcoin ETFs have been like such a monumental thing, like especially long term, because a lot of these people that don't want to play that game, they now have like easy access, and they can access it through the same vehicles that they're familiar with. So
Absolutely.
I think people tend to overestimate like progress in the short term, but I think in the long term, if you look over like a 5, 10, 20 year period, like the impact of all these pension funds, 401ks, like all putting 1, 2, 5% allocations into Bitcoin through these ETFs, which I think will become standard for most wealth managers, is like monumental.
We are the next generation of leaders. We are the future. All these old head motherfuckers, they're going to die. Do we want crypto to succeed? 100%. So you don't think the US is going to have a Bitcoin reserve in the future? You're stupid. Because if El Salvador does, so US will. And then other countries will follow. Because everybody follows the biggest dog. I wouldn't be surprised if Trump wins the election and announces the fact that they buy 1 million Bitcoin to just chill and just hold on to that.
Well, I think they've probably already been buying Bitcoin for a long, long time. Think about it. Why would the government tell the people that they've been accumulating Bitcoin? All they're going to do is impede their own ability to accumulate supply. So it's actually in their interest.
Fidelity's been mining Bitcoin since 2015.
There you go.
2015. Low key. Yeah, this space is maturing, but it's still so early, dude. Because what we need to understand is that it's a new industry that's being created. The year's 1848. In the eastern colonies of the United States, they hear rumors that in the West, there was people and peasants finding gold in this place called the American River. After the president confirms, hey, you know what? There's actually gold here. There's real opportunity. 300,000 migrants moved from east to west on the pursuit of finding gold. It wasn't just miners that moved, doctors, lawyers, all people identified opportunity. Today, the biggest digital gold rush, or the money that we're experiencing, happens to be in the internet space. I don't have to deal with dangerous animals, treacherous terrains, thieves. I just have to log into my computer and I have access to the latest and greatest gold rush, maybe even the greatest gold rush in human history, where it doesn't care about your religion, your background, your race, your color, nothing. Do you provide value to the marketplace? You'll get compensated. Do you know how many people were left out of the California gold rush because of their age, gender, color, religion? Tons. No resources. Today, what resources do you need to get involved in the markets? A phone, access to the internet. It's
Everyone
insane.
watching this right now has a phone
Absolutely.
or a laptop that they're watching on.
So you're either going to consume or you're going to produce. It's very simple. The asymmetrical bet online is insane, but the asymmetrical bet in crypto on top of the internet is even higher. You can go in right now as somebody that has no job, become a valuable community member in 10 different communities. And within 3 to 4 months, I guarantee you half of them are going to be offering you moderator jobs. and you'll have a full-time income.
People don't realize that. Like, it's crazy. Like I've been working obviously in the content space and also on the agency side, like, you know, helping advise projects and stuff. And like, it's so hard to find good staff members, good researchers for content, good moderators for projects. I've got my like business partner sitting over there. Like, it's really difficult. So like a message to everyone watching this, like, if you're serious and you like really lock in and you grind, not even for like 2 years, it's 6 months. Like, if you need a finance degree, it's 4 years, it's 10 years of working. You're gonna climb the corporate ladder. Like, literally in this space, 6 months of like 10 hours a day, hard work, you can be in a position where, okay, maybe you're not making 6 figures a month, but you'll be making
you'll
5,
be making
10K a
you'll
month,
be making
you know?
a full income.
Yeah, full income.
100%.
And you have location freedom, time freedom, which is like all really like, what are you making money for at the end of the day?
And if your fixed expenditures are low, like we talked about before, now you have time freedom.
Yeah, exactly.
Now you're set, and now you create the mental real estate in order to identify more opportunities. This is readily available for everyone. I've been talking about this for a while. Most people are just lazy. Most people don't think that it's real. Life is so paradoxical, brother. All we had to do was work hard and press a fucking green button to get rich. That's it. People overcomplicate it. That's it. All you had to do was make money over the last 10 years and put it in Bitcoin. Oh, yeah, it sounds easy in retrospect. Okay, yeah, because it was.
And in 10 years, it'll sound easy.
That's all you had to do, motherfucker. But no, overcomplicated fucking this bullshit business plan, expenses. No. Make money, buy low, sell high.
I think the issue is...
The Bitcoin, baby. Fucking love it.
It's so good. I think a lot of people, though, they're like conditioned, and this is the school system, right?
For sure.
Like, I went to a school that was also relatively, I guess, conservative, good school, but conservative. And I find like a lot of my friends, like that I've, you know, been to school with, they find it really difficult to like make the leap and or try something and take a risk because you're conditioned into like, no, you need to go to university, you need a corporate job because how else are you going to afford a mortgage, and you need stability to pay off a 30-year loan. And I feel like it's obviously top down, that narrative's been driven, obviously because it benefits the banks and gives them more liquidity to offer loans for credit. And it keeps the credit cycle going. So it's actually in the best interest of these organizations to have this system. But I think people need to take responsibility and just accept like that is the system. Like a lot of you, and even myself, were born into. I think I got relatively lucky that, I found crypto probably similar to you. Like in the beginning, I had, curiosity of mind, and then I got a bit lucky, and then.
But no. Do you know how many people heard about Bitcoin in 2013 and never did anything with the information? It's not about just having the information. It's about acting upon the information, because it's about materialize. You can have dreams and ambitions. If you don't materialize them through hard work and effort, it's not going to happen. You want to become a millionaire? Cool. It's not just going to happen. You have to materialize that dream into reality through action. Action is what brings things from mind to the three-dimensional world. It's what makes it real, right? So when people talk about this idea of, that we are the essence of God, right? God created the universe. Well, we have the ability to create things through thoughts, materializing it through action. So you want to become rich, you want to make money, you want to become successful, you want to develop a good physique, you want to develop a good network. Okay, perfect. You're going to have to expend the necessary energy in order to acquire that. There is no give and take. There is no aspect of, free for all. There's a price for everything. A price must be paid for everything. Yeah. That's just natural law. You want a tree, perfect. You're gonna have to plant the seed.
Even what we do, like it's hard. It's not easy.
It's not easy. But once again, we're talking about the asymmetrical bets and the asymmetrical upside. So if I'm to work 5 years, perfect. Do I want to work 5 years for a $50 million payout? Or do I want to work 5 years for a $50,000 a year payment? Well, the choice is mine. So I need to find the industry, the business, the vehicle, the narrative that'll propel me to my goal quicker. When the internet rolled around in the early 2000s, people were still using fax machines. They were still using different, the little 3-button bullshit with the phones and the palm tap thing. All these businesses become obsolete, irrelevant. What hasn't become irrelevant is the narrative. So your job isn't to find a business model that is a flash in the pot. It's to follow a narrative. What's the narrative? The internet. The internet was the narrative. You could have just stuck around at the forefront and the cusp of internet innovation. You would have gotten
even
rich.
People that just bought domains and sat on them for 10 years. Like any single word domain is now 6 figures. Buy
low, sell high, baby. It's the name of the game. Supply and demand. The reason Bitcoin's going up is because more people want it than people want to sell it. That's it. That's the essence of everything. Buy low, sell high. You want to do drop shipping? Cool. You're going to buy low a product and you're going to sell it high. You have an agency service and you have employees. You're going to buy low your employees' time and you're going to sell it high. You want to get into the meme coin space? You're going to buy low and you want to sell high. It's all, the entire world is a meme coin, my brother. It's all a meme coin. Just people add all these additional fancy things attached to it that aren't necessarily needed. Now, my opinion is this is a dual-sided kind of perspective because we're talking about the positive things about it. Yeah. Let's talk about the negative things about it. So we're talking about like, hey, crypto's great, but why do most people lose? If it's so good, why is it that most people lose? Well, in fact, it's not that most people lose. There's always the same percentage of winners and losers. 50% of people make money on the trade and 50% of people lose money. To me, 50-50 is still a better variable odd than business. Business is maybe what, 20% success? Holding on to your job.
I think less than 10% of small businesses succeed over a decade.
50-50 partnerships within 5 years, fully dissolved, about 80% of them. Why? Well, because you're betting on that thing. Most people are making bets. Business model you endeavor on, that's a bet. You're betting your entire existence that that's the business model you're going to work on.
Going to university and putting 4 to 6 years in is a bet. It's actually a time trade because, and this is
you're exchanging time, opportunity, energy, attention for the potential of a positive future. When you haven't even positioned yourself for that positive future, you've just been sold that the paper is going to give you a positive future. And today, more than ever, nobody gives a fuck about the paper. They care about what the experience and the expertise. So I agree with you.
My advice, and this goes back to the point that I was talking about when I was talking about my upbringing, my advice that I give my friends now, because they're young. What you have to realize is, like, I'm 23. How old are you?
29.
29. So still young. Being young, you have the benefit of time, and time's the most valuable resource. So I say to them, just give it 6 months, just pause your job, save up for 6 months, get enough money together to sustain yourself for 6 months, even to a year, and just try something, just grind something, put your time into it. Obviously, for me, that's crypto. For someone else, it might be something else online, running social media accounts, drop shipping, utilizing AI, just try it. Worst case, like it doesn't work. Oftentimes you'll find it does work and you'll keep going. Worst case, it doesn't work. You've always got the safety net of if you've been to university or degree, you can always go and get another 9 to 5.
None of these things are safety, right? These are things we tell people to be politically correct, but we know it's not.
Yeah.
There is no safety in a job. There is no safety in a degree. The only security is found within yourself. Your skills, your network, your resources, your abilities, your mindset, your intelligence, the things that you can actually control. What's on the outside, I could fire all my employees for any of 100 reasons tomorrow. For them to feel like they have job security, I could lose everything tomorrow. My business could not work, get no new customers. My employees are relying on me, right, for a paycheck. Their confidence, which is totally fine, is established within the paycheck. But not every boss has tens of millions of dollars. Not every company is sitting on tens of millions of dollars that can actually fund employees for an extended period of time. A lot of business struggle. Most businesses are running on 6% margins. So job security is an illusion. People tell, go get a job, go get your 401k, go get your life insurance, play it safe. Dude, life isn't safe. The highest risk takers are the people that win. And here's the thing. I prefer going out with nothing, having gone all in and tried, because I end up with nothing either way. I die naked, alone.
Yeah, everyone does.
Everybody. So that's why I don't take it so seriously. Everybody's out here taking it seriously. Like they're going to take it with them. Like they're going to be remembered in 100 years. They're not. You and I are having a conversation here. People just happen to have the value of benefiting from it, but I don't give a fuck. Like I'm talking to you. We're having a candid conversation that in 100 years, it'll just be our interaction. We just had it ourselves and whatever, 100,000 plus 200,000, 300,000 people watched it. But none of it matters. So when you take the perspective, none of it matters. We're here today, gone tomorrow. There's no such thing as security in a job or in another individual. It needs to be found within yourself. Highest risk takers are the ones that actually win. Elon Musk took $150 million that he made from PayPal. He could have been retired, living on 10% off that shit every single year in some Caribbean island. And he said, fuck it, putting all the money into Tesla, SpaceX, and I'm going all in. And he had to ask for money in order to do what? Rent a room. Risk. No risk, no reward. You want to risk? Okay, that's where the game is played. Bitcoin was risky 10 years ago. Okay, now they capitalized on it. So it's taking intelligence, because we're talking about you need to be your most valuable asset. You need to find your comfort and your security in yourself. And now you place bets, asymmetrical, high leverage, few sizable bets. You don't need a ton of bets in life. You need a few really good decisions that'll take you to the top.
And building up skills, like your number one resource is time, but then your second resource, and you can acquire this via spending time, is skills.
Yes.
And I mean, for you, it's obviously been becoming like an expert in crypto, social media, investing. But you know, for someone else, it might be something different. But it's all about like, can you acquire a skill that has demand in a marketplace, and can that demand outsize like the amount of time that you're spending?
Well, I like that you're saying these things. That, you know, I call it the trifecta of a money guarantee. Your ability to make money in perpetuity, regardless of the market, regardless of the niche, regardless of the time. There's three things that you need to absolutely master in order to guarantee your ability to make money in perpetuity. One is you need to be the best at what you do, right? So people will pay you top dollar if you're the best. You don't want to be hired because you're the cheapest. You want to be hired because you're the best. Two is you need to be in high demand, right? So you need to be in a business model, in a niche, in a momentum, in a trend, in a narrative that has high demand. If you have a great product, nobody wants it, you're not going to make money. If you're the best, but nobody knows you exist, you're not going to make money. So you need to be in high demand. You need to be the best at what you do. And third, which is the difficult one now, is going to be harder than ever, so you need to become irreplaceable. Now AI can replace you, right? Jobs are becoming a lot cheaper. Online jobs are becoming more affordable. So the question is, what's your moat? For those people that don't know what a moat is, picture the castles back in the day, right? That would be placed, and around it would be a moat. It would be like that river, or that riverbed, or the hole in the ground, and it was kind of like your safety between the enemy and yourself. It was the gap. It was the difference point. So what is, right, your moat when it comes to becoming irreplaceable? If you're a copywriter, if you're an analyst, if you're somebody that does social media, do you have the ability to be replaced in the future? Because that obviously affects your security. If the answer is yes, then you need to find irreplaceable skills. We'll talk about irreplaceable skills on a different podcast, but these are the three, right? Become the best at what you do, be in high demand, and become irreplaceable. If you can find that trifecta, and I just happened to find it in crypto and digital marketing and social media, so I stuck to it, you'll make money in perpetuity.
Speaking of AI, is that something like you're now using in your business to become like a benefit instead of a detriment?
Yes and no. You know, we've been using AI a lot for back-end stuff when it comes to admin, when it comes to editing, when it comes to labor-intensive stuff. But AI is going to evolve so much in the next 3 to 5 years that the tech and tools that we're using today will become obsolete in like 3 years. Yeah. ChatGPT or OpenAI just rolled out Search GPT.
Yeah.
So now you have AI running search engine, which is fucking crazy. So Google might become obsolete in its current format, which is crazy to think about. We would never expect that. But now I find myself, if I have a question, no longer going to Google.
I've got a tip actually for the average person. I have a iPhone 15. You've got a little power button, like a action button. I've set it to an AI model because just like you say, like I want to easily be able to like answer questions and get definitions. And sometimes they're wrong. Take it with a grain of salt. But literally all I have to do is click this on my phone. And it's a shortcut straight to like ChatGPT. And I use it for I use it for things like Twitter. Like I'll literally be I'll be writing a tweet and then I'll think, okay, what's a better word for this? Like I just want like a better synonym.
Give me 4 synonyms for the word.
Give me 4 synonyms. Or can you just like can you check the grammar on this? So like, I feel like people can, I mean, anyone with one of the newer phones can do this. And you literally have
it's all about path of least resistance.
In your pocket.
Once again, bro, it all comes down to path of least resistance. Why are you doing that? It's not because Google doesn't have the information because these motherfuckers are pulling the info from Google or they're pulling it from search engines. It's because it's the path of least resistance. So once again, the money that you go into, the business you endeavor in, the niche that you pick, is it the path of least resistance to the top of the mountain or to the accomplishment of your goal? If your goal is to become a multimillionaire, you're not going to do it by working a 9 to 5 hourly job. The expectation, the goal versus the actual input doesn't work. Yeah. So the reason people were using Google in the past is because it was the path of least resistance. But then, like every technology, it becomes corrupted because you have greed. So the first 2 pages of Google, first 3 pages, it's all SEO, fucking ads, paid placements, paid articles. So you can't even trust the first 2 pages necessarily that you're going to get accurate information because you're probably being pitched. So people are realizing that now and they're like, why am I going to fucking spend 8 minutes searching for something when I can literally just ask my AI tool what piece of information I need answers to? Path of least resistance. And that's why the business works.
Yeah, 100%. I want to circle back into the crypto conversation now because we spoke about meme coins earlier. Obviously, that's a vertical that you're super bullish on.
So I invest in 3 things. 1, I invest in trends. 2, I invest in narratives. And 3, I invest in teams. That's it. So what's the narrative of the bull run? I want to invest into that narrative. What's the trend? Trends is micro pumps or micro cycles inside of the narrative. So for example, biggest bull run cycle in history because institutions are in. Okay, that's the narrative. What's the trend inside of that? We had an AI trend when NVIDIA rolled around that lasted maybe 4 months. Is it going to come back? I don't know, but I rode that trend. Meme coins, okay. Is it a longer trend? Is it potentially a narrative? I don't know, but it's there, it exists. So making money off of momentum. So narratives, trends, teams. Teams, you have to invest into winning teams. The reason I bought 1% of PancakeSwap supply last bull run was because I realized that CZ was inconspicuously involved. In 2017, when I bought BNB at $2, I bought it because I went on the exchange, I went on Binance, I was like, okay, I'm gonna bet on this guy. Who did I bet on? I bet on CZ. I didn't bet on BNB. I didn't bet on the Binance Smart Chain. I didn't bet on PancakeSwap, the token, and that being the #1 DEX on the BSC chain. No, none of that. I bet on the team. And the team is what carried. If you bet on Elon, not on Tesla, that's how you're going to make money. You're betting on the winning person, on the player. So there's different teams. There's just different people worth investing in. So when Luca came to me, Luca Nets from Pudgy Penguins, and he's like, hey, Luke, there's the opportunity for us to buy out Pudgy Penguins. Do you want in? I'm like, 100%. Was it just the IP that I was looking at? No, I was looking at him. I invested in him. He's the winning horse. Trends, narratives, and teams. It's the name of the game. So that's how I think about it. I don't look at Bitcoin. I don't look at Ethereum individually. I don't look at meme coins. I take a bigger perspective view of the market because these are the things that have worked for me. So what are the narratives that I see? Institutionalization of the major projects. So I talked about last year, Ethereum ETF becoming approved. People said I was crazy. I was 3-4 years out. They don't understand the growth of exponential curves. They don't understand the law of compounding effect. So clearly the time between Bitcoin ETF approval and Ethereum ETF approval is going to be shortened because there's proof of concept. Next narrative, the global dominance of Bitcoin and Bitcoin now being used as a reserve fund across government institutions and across corporations. It's going to become a thing. It might take a little bit. People might do it, like you said, under the table, try to sneak in as much supply as they possibly can. But all we need is one gasket.
And Trump actually wants to buy back all the miners.
All we need is one gasket to blow for the entire fucking thing to rip. For China to it's just one signature. One signature.
Yeah.
And China's back in business. You think they're going to lose out? You think they're not going to fight? 100% they will.
That's asymmetrical upside for you.
There you go.
Pretty much unlimited upside on an event like that. But downside is,
and because they're realizing, hey, we don't have to value Bitcoin as our currency. We just have to use it as a reserve to prop up our currency.
Yeah.
So now the perspective is different. Now we're buying Bitcoin as a potential of, if this thing works, we're fucked. So might as well have it just in case.
Like a hedge.
Winning teams. A couple winning teams. 2020, if I'm not mistaken, 2021, Pavel Durov, CEO of Telegram, who still owns 100% of Telegram. He's the product manager of Telegram. He decides to launch TON. At that time, it's called the Telegram Open Network. But they had a lawsuit with the SEC because they raised billions of dollars. They weren't allowed to, blah, blah, blah. So they issue a refund. Then they do a public event where you can mine the tokens. You're good to go. Fair launch. Last year, I'm like, what is this TON thing? I start exploring it. What is this thing that I see on this platform? I download it. I download a wallet on my Telegram. I start utilizing it. I'm like, oh shit, like this is the future. Why? Well, because the guy that owns the platform of communication, the distribution, the 950 million users, he's the same guy that is now allowed a payment infrastructure and a blockchain to be built on top of what he already owns. So if this guy for the last decade, has been the product manager of his own company, there's only 30 people working on Telegram. It's an ultra profitable company. They're censorship free resistant, which is what you need in order to transact. You need freedom of communication and freedom of transaction in order to be truly free. Track record of winning. Yes. Okay. Let me bet on them.
Yeah.
Very simple. So at a $3 billion market cap, I start shilling the fuck out of TON.
Yeah.
Why? Because it's obvious.
What's it sitting at now? Like
$25 billion market cap.
Yeah. What do you see the upside on TON? You think it can
it's a $25 coin. Yeah. I think it hits $100 billion market cap. Dude, it's the only bear market proof crypto in the world.
The way I view TON is it's like, as you said, it's one of the only chains where it's probably got actually the ability to convert real users.
Yeah.
If you look at
and
all these other chains,
it has
real users already. So all
and
they need
bear
to do is
market
convert
proof
them.
users.
Yeah.
Because now they rolled out a crazy feature on TON. So Telegram, the fusion of both, I can now send money via USDT to your Telegram username.
So cool. I tried it out the other day. I can literally just ping you.
It's sick. It's sick.
$1 million if I wanted, right now. It's crazy.
It's insane.
Instantly.
And now with USDT and USDC, the companies, obviously Tether and Circle, they're rolling out different pairs. So now they're rolling out the euro. And what TON's doing is now not only remittances for free, so I can send you $1 million for free to your Telegram username, they're doing Forex swaps for free. So now I can swap from USDT to euro and off-ramp for nothing off of a fucking communication application, dude.
It's crazy.
It's the path of least resistance.
It's like WeChat in China.
It's a super app.
Yeah.
It's a decentralized super app. It's the ambition of a decentralized super app. Once again, winning teams. So you look at winning teams, you look at the trends, the narratives. People are on mobile. People utilize their phone. People don't want to download 90 applications. Most people are not hopping on their... Dude, it's so annoying to hop on your laptop, open up your Chrome extension, connect your wallet. We do it because we have to for security purposes. 99% of people, they don't want to do that shit. They want easy access, safe blockchain, protection, communication, transaction. That's it.
You know what's funny though? Even the janky MetaMask ledger setup, I find is still easier than like issuing a bank payment. Like
it's a lot easier.
Bro, you get the conversion fees from currency to currency.
Everything.
It takes 4 days. You put in like something slightly wrong. It bounces back. I mean, obviously, same thing could happen with a address, but you're probably copying and pasting to minimize the risk. But even
small things like, you know, I walked into the Rolex shop the other day. I saw a nice piece. I'm like, okay, I'm gonna buy it. Okay, sounds good. Let me put in a deposit. And I'm like, I'll come pick it back tomorrow. Okay, sounds good. On my way the next day to pick up the watch, I have to call the bank. Not because I don't have enough money, but because I have to get permission for them to enable a $50,000 spend. That's fucked. What happens if they say no? Oh, they'll never say no. Well, that's your misunderstanding of financial institutions. That's your misunderstanding of how banks work. Because when you put your money into the bank, you're betting on the bank. You're betting on the bank not defaulting. You're betting on the bank giving you the money back. You're betting on the bank being solvent. All the things that we know banks don't do. Because the banks are not in the business of deposits. When you deposit money into the bank, your money isn't safe. It's an illusion. You're lending your money to the bank. That's why you get an APR. As soon as you get that 0.1% return,
a pretty low one.
As soon as you get that 0.1% return, or if you get a money market account, maybe 5% return, the money that you've deposited becomes a liability. So what you see displayed on your application bank account is merely a receipt of what the bank owes you. So when you swipe your card, it's not that you're spending your own money. It's that you're pre-authorizing the expenditure that the bank is covering, and then with what they owe you, they'll cover the balance. So if the bank is not in the business of deposits, what's the business of the bank? Well, the business is in the bank of fractional reserve banking. That's what we hear. Well, banks don't fractionalize reserves. That's not what the bank does. Okay, so if the bank is not in the business of deposits or fractionalizing reserves, what is it in the business of? It's in the business of credit creation. That's the name of the game. Most of the money that's created in the space, in the markets, is credit creation. Banks are in the business of buying and selling equities. So they make a margin, they make a fee. Their job is to be the middleman. Their job is to create credit. 90% of the things that we see around us have been propped up by credit. The issue isn't credit. Credit isn't a bad thing. It's when you create credit that has no GDP or no real growth value attached to it. So if I get a credit, for $10,000 Louis Vuitton bag, and I spend that, there is no real GDP. There is no real stimulus or growth. It's just an expenditure. That credit creation is what is causing banks and the trust in banks to erode, because people are realizing, hey, we've been told that banks keep our money safe, but there's bank runs like Silicon Valley Bank, which is a huge bank.
Yeah.
So clearly we can't trust them. They're not in the business of fractionalizing reserves like we've been told. They're in the business of credit creation. So once again, if I leave my money in the bank, am I betting on their team? Am I betting on their narrative? Do I think banks are a winning narrative or a losing narrative? Losing. 100% losing narrative. Do I like their team? No, I fucking hate their team. So why would I keep my money with them? Why would I invest with them? And why would I believe in the fact that they're the future of the narrative? They're not. So I don't bet with them. I don't put my money with them.
So where do you put your money?
I can't say that on podcast. We'll talk about it after the podcast.
Yeah.
But I don't keep it in.
Well, you can give like crypto, real estate, obviously general stuff, but it's
I don't keep it in crypto. I don't keep it in the banks.
Yeah.
I don't keep it in the banks. You can't trust the banks, because banks, once again, they're a business. They're not this financial hub of keeping your funds safe. For most of history, banks
you probably still need
small.
Some money in the bank just for liquidity, but
I mean,
savings, right?
Yeah, but once again, that's insignificant. People that have 90% of their money in cash and think that they're safe, that they have savings, they don't realize that that's not how money works.
Yeah.
It's not what money does. Money is not there to be saved nowadays. If it was 100 years ago, you could save money. If you were in Rome before they started peeling the edges of the gold coins just to devalue it so that they could make some new coins, if you were in Rome before that time, before the devaluing of the currency, you could just save.
Yeah.
after the devaluing of currency, you can't save. So we are in a situation where we can't save money. Now, we think about it in dirhams, USD, British pounds, like the top currencies. We need to think about the guy that's holding fucking Zimbabwe dollars or the lira or the fucking who knows what Turkish, I think it's Turkish lira. They're all shitcoins.
Argentinian pesos.
Argentinian peso, all of it garbage, going to zero. If I was saving in any of those other currencies, if I was saving in the Japanese yen, I'd be broke. So what do? What do? You need to find a better vehicle to preserve your money and to preserve your purchasing power into the future.
So I think obviously if you've already made money, that's hard assets like Bitcoin, real estate, gold. But even I believe
no. It starts at the basics. Even if you're making $1,000 a month, if you're remember we're talking about the saving gap. If you have a gap of $50, okay, that $50 in 5 years is not going to give you the same purchasing power of $50. It goes down to the dollar unit. It's not just about insane amount of money, because once again, imagine being like, hey, you know what? I'm going to go into the gold mines. I'm going to collect a ton of gold, but I have no plan on where to deposit or what to do with it. It's stupid.
Yeah.
You have to start with the end in mind. The end in mind is, okay, wealth preservation, freedom, long-term longevity. You want to know what your purchasing power is going to be worth in 50 years. Okay, well, where do you hold your money? It needs to be a scarce asset that's highly valued, that's fungible, that's non-fungible, and that gives you the ability to transact and remit without a middleman. And today it just happens to be Bitcoin.
My best advice, I mean, and I want to know if you agree with this, is if you have, I don't know the exact amount because it depends on the country. You know, in India it might be 10,000, in US it might be 50,000. But if you have less than a certain amount, I actually believe it's better to just pour that money instead of worrying about where to invest. Put that money into resources to help you, like, A, acquire skills, and B, like, scale businesses. So I found, like, when I had my first maybe $30,000-$40,000, like, the best use of my time at that point was to go and hire researchers, crypto researchers, to help me acquire.
But that's where you put your money in.
Exactly.
That's an investment.
I believe that's the best investment for people.
I agree.
Under a certain amount.
Well, you need to level up the video game character.
Yeah.
You know when you were playing the RPG or the MMORPGs back in the day, where you would be like that level 1 peasant with the wooden sword, and you would go to the orc, and the orc would just fuck you up. But then you fought the orc enough times, you got XP points, and then you got to the point where you were level 99, and one sword swipe, and you'd fuck up the orc. And then you could fight different beasts, and they were in proportion to your skill level. It's the same thing with life, right? You face demons, you face challenges, you face problems, you face enemies, difficulties, and they're only challenging in direct proportion to your skill set. That's why the problems that we used to have are like, that's light work. Oh, you can make more money again. Because we've unlocked that level of the character where those problems are no longer problems. They're just annoyances and inconveniences. So if you level up the video game character, which is the name of the game, these problems are no longer problems. You crush them by becoming better. So I agree fully. You have to initially invest in the video game character. And then once you have enough, you start building up the little gold coins in the top right of the...
And then you're just siphoning, you know?
You just siphon it. Yeah, start leveling up the character, the experience points, the attributes, the fucking treasury, the outfits, everything. Just start leveling everything out.
This is actually the problem, I think, with a lot of people that do invest in crypto. They focus on investing as the end goal. It's like, you know, where should I put my $1,000? Whereas I think it's equally, if not more important, to have, like, a major focus on building up your income streams so you can funnel money in. Like you discussed earlier, how like you had a successful e-commerce business that allowed you to take big bets on Obviously, no one can afford 1% of, well, the average person can't afford 1% of Pancake Swap. You had the income to facilitate that.
Yes.
So that's also very important. I feel like people, they try and
you need
jump to the end.
You need income producing skills.
Yeah.
Income producing skills, which once goes back to the trifecta. Right? If you get the trifecta figured out of being the best at what you do, being in high demand, and being irreplaceable, think about marketing. Think about sales. You can apply these three principles in anything. Let's go to sales. If you're the best sales rep, aka you close leads, you'll be in high demand if you select the winning offer, which means you'll have enough leads to make money, and you'll be irreplaceable if your conversion rate is good enough. You'll make money. You will make money. Being the best is fully in your control. Being in high demand is fully in your control because you select the niche that you want to be in. And then being irreplaceable is fully in retrospect based off of what? Your results. Being the best is going to yield positive results. positive results is going to make you irreplaceable.
Sales is so good, man. I think it's, especially with AI, like sales is not going away.
And it's just like, it's not just sales. I just was using it as an example because we were talking about income producing skills.
Yeah.
You take these income producing skills, you invest into them, you hit the trifecta, and then you find that you have more money to invest than you are spending. And this expendable money now operates differently because you don't want to be investing out of a place of scarcity and poverty because you're going to invest differently. Right? You're going to invest because you need to make something. When you're investing out of abundance and because you have enough, well, that's fine. I'll just put this here. I'll park it. Not think about it, not worry about it. If you're checking your P&L every 20 minutes, and I get it, bull runs, different vibes.
It changes the game a bit.
But if you're checking your P&L every 20 minutes and you think that that's productivity, it's far from it. You need income producing skills. You need to build that moat, invest. Once you create wealth, you need to multiply it. And then once you multiply it, you preserve it. And preserving, it's about preserving the purchasing power long-term of the asset. And the asset is, once again, your time. Because if today you gave me 10 hours of your time and I gave you $1,000 in return, in 20 years, I would probably have to pay you double because of the amount of deflation, the amount of inflation and the amount of debasement that's taking place for those same amount of hours. So your hour is what's becoming devalued. It's not the money because you have to work twice as hard. That's why most people, we're talking about the hamster wheel. It's hard. It's hard. Why is it hard? People don't ask, why is my life hard? Why is it hard? Well, for a couple of reasons. We talked about the moat. You live off of your fixed expenditure. You can't move off of it. 2 is the feeling, we talked about the conditioning, of unproductivity. The moment you stop doing what you're currently doing, the 9 to 5, you feel unproductive. That's conditioning. Sometimes not moving is the best move.
Yeah.
That's been in my life. So quitting my job and waiting 3 months till an opportunity showed up was because I created that moat of 6 months for me to be able to actually look for opportunities.
It's the same with investing. Like people try 100%. And overtrade. Sometimes, like you just said you took a break. I just went to Europe because the market was slow. There wasn't as much opportunity. Obviously, there's some merit to grinding nonstop.
So once again, it really has to, like I said, it has to do with the narrative. It has to do with the trends. It has to do with where you select to focus your time, energy, and attention. Life is simple. So whether you pick crypto, whether you pick digital marketing, whether you pick e-commerce, whether you pick fucking landscaping, whether you pick plumbing, it doesn't matter. All it comes down to is I need to expend X amount of units every single day of time and energy. How much do I want in return for that? And do I want the path of least resistance or do I want the complicated path? It's all your choice. But when motherfuckers out there are printing money out of thin air, printing money out of thin air, why the fuck would I work for it?
Yeah, being a slave to a
commodity. Why would I work for it? I understand working to a certain point in order to establish financial freedom. But once I have freedom, why the fuck am I working for money? I'm no longer working for money. I work for other things. I work for relationships. I work for influence. I work for connections. I work for my network. And maybe because I'm bored, but no longer for money. So the point is, you need to change the mindset. And every person, even multimillionaires, they're in hamster wheels. False productivity, because it's not the highest upside, highest leverage opportunity. So
I'm the same. I often get bogged down with admin stuff.
I mean, look at it. You need to look at nature. Look how nature works. Does the lion go out and hunt every single day? Or does it eat and then it rests? It eats and then it rests. This idea of hunting every single day.
Chooses the moment.
It's not right. It's not proper. The conditioning is off. The slave masters, they realized back in the day you had to crack the whip over the back of the slave because they were like, hey, we'll just force people into slavery. So we'll pillage a village, take all the women, make them our wives, take the kids, put them in the army, take the husbands. If they're dissidents, the men, we'll kill them. If they're good, we'll make them slaves. Well, now that you have a slave culture, all you know is slavery. So what if we all know a system that is just based on slavery? We don't know freedom. We don't know anything else. When you begin to study history, you begin to realize during the feudal age, when the peasants kind of worked on the land of the feudal kings, the feudal lords, they only worked 140 days out of the year. The other 200 days they chilled. They didn't work. They went to the creek, they went to the river, they fucked around, Half of the year they couldn't, work on the land because it was snowing, X, Y, and Z. So today we work more than the peasants. Most people work more than the peasants used to and have less to show for it. They have no land, they have no house, they have nothing. It's the illusion of slavery. It's the illusion of freedom. Back in the day, you at least knew you were a slave. You knew it. You had to buy your freedom. Today, you don't know you're a slave. Instead of cracking a whip, they've just printed money out of thin air and told you it's valuable and this is what you're supposed to work your entire life for. I don't work for money. Fuck that. I work for relationships. I work for network. I work for personal development. I work to provide services and goods and values to the marketplace. And if money comes as a return, as a byproduct, so be it. But to be working for money is to be working for what somebody else owns, because you don't own that money. And most people, if I asked them, define money, they wouldn't be able to. So most people are working for something that they don't even know what it is.
How do you define money?
Well, money is technological advancement of medium of exchange and store of value. Back in the day, the first interactions of money was bartering. You would have cows, I would have pigeons, but it was an unscalable model, right? Because I would have to find somebody that actually wanted pigeons in order to buy my goods. We introduced the next technological advancement of commerce, which was coinage. It was the first time in history where people could actually save something that wouldn't die or wouldn't rot. And I could exchange it for fair value and you would accept it. So there was a medium of exchange. We agreed upon something. We agreed upon a store of value and it was easy to handle. That's money. Then we realized, hey, you know what? We're going to have to mine more gold in order to grow societies, or mine more precious silver, or we're going to have to go pillage another empire and take all of their gold. But now we have a lot of gold. We have big gold reserves, big treasuries. So we can't be moving all of this at all times. It's a big liability. Introducing the next facet of technological advancement of how people transact and how people save money, paper money. So in the California Gold Rush, 1848 rolls around, two dudes walk in, to California, one with the last name Wells, one with the last name Fargo. And they say, hey, you know what? We'll hold on to your gold deposits, and we'll give you paper receipts in return. Wells Fargo, $10 trillion assets under management, 150 years later. Then 1971 rolls around. And they say, hey, this paper units that used to denominate the amount of gold storage that you have, fuck that. Print as much money as you want. Next advancement of technological revolution, credit creation and fiat. Was it positive? Was it negative? Well, debatable. Depends on who you are. If you're the printer, you're chilling. If you're being printed on, you're fucked.
It's been the most profitable period in history for crazy. Banks, investment funds.
Absolutely. In businesses, countries, all together, there's positives and negatives, but the gap is insane. The next technological advancement of money, Bitcoin. Going back to peer-to-peer transactions. Remember, Bitcoin might be psyoped and co-opted because Bitcoin's, what's the title of Satoshi Nakamoto's white paper? Peer-to-peer electronic transactions. Not store of value. Bitcoin wasn't created to be a store of value. It was created to be a medium of exchange. Today, Bitcoin doesn't serve its primal function, which is to be a medium of exchange, but it was created that way. It was created to be a replacement for transacting with banks. This next advancement of technological revolution. It's the digital version of coinage. All the best properties of digital coinage of physical gold and coinage in a digital format.
I think since it was created, the situation regarding fiat has significantly worsened. Like in the last 3 years, we've seen the money supply double
because it's a debt spiral. It's like a death loop. There's no going back. You can't. There's no going back. It's dead. The U.S. is dead. You can't save it. How do you save it? How do you save 30? What the fuck is $40 trillion in debt? Explain that to me.
Raise taxes.
But once again, taxes are an illusion that you're funding the government when the government prints money to fund itself. Taxes are
crazy. I mean, this is another discussion. Taxes are crazy. You get taxed on your income, then you invest your money, right? So you invest in stocks, real estate, then you get taxed depending on what tax rate you're on the profits of those investments, and then when you die, they tax you again on the inheritance. So they tax you 3 times.
Let's add to that. Make $1,000. Okay, perfect. First, the guy that sold me the good gets taxed.
GST.
Then the guy that sold me the good gets a payment processing fee. The payment processing company now has to pay taxes on that. The guy that sold me the goods has to pay taxes on that. the guy that he bought the goods from in order to sell them to me at a premium has to pay taxes on that, the inventory. I have to pay taxes on the money that I make. I invest the money, make capital gains. Okay, perfect. I have to pay tax. I take those cap gains, I buy a house, I have to pay taxes on the house. Now I have the house, perfect. I have to pay taxes on the property. 1% a year.
Anything you get fixed, kitchen renovation, all of that is taxed.
Property tax. I don't think you have it here in Dubai, but the rest of the world, if I go to New Jersey in the United States right now and I buy $1 million house, there's a 1.5% a year tax.
I'm from Australia. We have
1.5%. You don't own shit. You stop paying for that property tax, the government takes your fucking house.
And you pay 5% at any time you transact, even if you lose money.
I go to the gas station with the little bit of money that I have left after paying capital gains tax and income tax, and I swipe my card. He's getting taxed off of my money. The fuck up, once again, where's the fuck up? Where's the issue? The issue is we've allowed there to be a middleman between our ability to transact. That's it. So they've abused their middleman power by creating a box and putting us all into it and saying any alternative system is a scam. Any alternative idea is fraudulent. Why? Because it jeopardizes their operation. We're talking about trillions of fucking dollars. We're talking about banking dynasties, families that have been around for hundreds of years that are at risk. So what are they going to what do you expect Jamie Dimon from Chase to be supporting fucking Bitcoin? Why the fuck would he? It's not his business. He doesn't make money from that shit. He doesn't care. So we've entered a situation right now where we have the soundest form of money. So what is money? Medium of exchange, store of value in and of itself. Today, what's the best store of value and what's the best medium of exchange? You need something uncensorable and something that is finite supply, limited supply, that has more demand for it than available units. Bitcoin, just the natural solution. If this changes in the future, it's totally fine. I don't mind. But we've progressed throughout history all the way back and looped it to bartering. But we have a digital version of bartering now that says we don't need coinage that's centralized or issued by a king or that is validated by a king. Because remember, money needed to be authorized and validated in order for people to consider it valuable. The dollar is backed by what? Why do people have strength and why do people believe in the dollar? Well, because it's backed by the United States government. It's backed by the military. So who's going to fuck with that? Very few people. So once again, that's what you're gambling, you're betting on. But they can turn on the printers at any moment. With Bitcoin, I see the network state growing. Can anybody make more Bitcoins? No. Okay, do more people want Bitcoins? Yes. Is the network state growing of people that fucking hate the government? Yes. Okay, well, what's the natural solution? How many billionaires own Bitcoin? Well, a lot of them. Okay, well, maybe they're all into something together. Maybe the conversation that they're having at Silicon Valley regarding the future of AI, regarding the future of censorship, regarding biometric scanning of your face in order to access the internet, in order to fucking send a payment on WeChat, WePay. What happens if you become a political dissident? What happens if the government doesn't fuck with you anymore? How do you buy things? How do you sell things? You need something that's outside of them. And that's what Bitcoin is. It goes back to the bartering system where I own my assets and I can transact and do with them as I please. And that's the natural evolution of money, brother.
This year, I think, has been the biggest shift in crypto. I did a video on this on my channel, which this podcast probably on, about how this year's been the biggest paradigm shift I've seen in my 6 years in crypto. And it goes on to what you were saying of the owners of these banks, they haven't historically been proponents of Bitcoin or crypto, but we've seen the narrative shift. We've seen, Goldman Sachs, JP Morgan, Fidelity, all these funds really start to shift their opinion. So I think now we're at a massive inflection point for the market. The ETF's really just the beginning. The shift is here. It's really happening.
It happened.
It happened. Yeah.
It's obvious. It's so obvious. Bro, they're printing money out of thin air. These motherfucking banks, these hedge funds, when they're getting money for free, 0% APR, they're trying to figure out, where the fuck do I put this money? Where do I put it? They're gambling. They're speculating. We've fallen into the illusion that some white-collared, blue-tie motherfucker that has a Harvard degree knows more about finances than we do. No. We'll create our own financial ecosystem. We'll create our own industries. So they're realizing, oh shit, these kids are actually out here creating their own industries. They're smarter than us. They're building DEXs, DeFi. They're cutting us completely out. We got to get in the game. And then they're like, okay, well, we make money off of fees. BlackRock, Vanguard. We make money off of fees. Well, let's start bringing in some ETFs. Let's start bundling some assets. Well, BlackRock's like, okay, well, if I own 1% of Bitcoin supply and I charge 0.5% fee on that, who gives a fuck what Bitcoin's worth? I just make free money.
Yeah.
They're in the business of making money. So they're finding trends, narratives, and teams. Same shit. Trends, narratives, and teams to invest in.
The risk a few years ago was that Bitcoin was going to be basically like outlawed, or there was all that thing about China banning Bitcoin, US. But like what's happened this year is it's been legitimized. And once you can't really put, the genie back in. It was
inevitable. All we saw on the news was the same dudes that run press articles to pump their stock so that they can dump on people. It's the same people run. You don't think, when Mark Zuckerberg, I invested 10% of my net worth last year in Meta. There was all these negative press releases coming out that, Meta had fumbled their metaverse and they had fumbled their ability to be a social media platform and got tanked. And part of me was like, why is there no positive press going out simultaneously to fight this? Right? Like if I'm a business owner and somebody says some whack stuff about my business, I'll come back and like smash it directly. But it was ghost from Zuck. It was ghost from Meta. Like, this is weird. The stock is tanking. And then, I forget what was the announcement. I think it was right before Q4 of last year. They announced some really good profits that were coming into Q4. And I said, you know what? I think right now is going to be the narrative of positive news that's going to be coming for Meta, because once again, there's people writing the news with intentions. So anybody that's a CEO in the stock market realizes that one of your jobs is to move the chart. Your job is to control the chart. Your job is to be involved with how the chart moves, because you have investors that you are responsible for. You have a board that you're accountable to. You're a publicly listed company. In comes Meta talking about fucking AI, talking about these multi-billion-dollar deals with NVIDIA. And it goes from 70% drawdown to all-time highs. All engineered with positive press, and all engineered to the downside with negative press. I made a tweet and I said, all the negative press that you see around Meta is institutions trying to buy up your bags. And now that things are high, they'll start rolling out positive press once they want to get out to create liquidity.
It's all narrative.
It's all narrative. So when we see Bitcoin narrative, fuck Bitcoin, Bitcoin is a scam, Bitcoin's going to zero. Well, who's writing it? Who's behind it? And what's their intention? What's the intention of this article? What are they trying to accomplish? Probably taking my bags. So I don't read any of that shit.
Yeah.
I'm fully aware, fully convicted of what I own. I don't have to listen to some bumbo on New York Times.
So aside from Bitcoin, I'm interested, because I want to wrap this up by talking about, some actionable stuff in the market.
Let's do it.
So Bitcoin, clearly, by now, if you've been watching the whole podcast, it's evident, like, we're obviously both very bullish on Bitcoin and have conviction. How do you view the altcoin market in relation to Bitcoin? Because historically, they have been linked. So
it's still linked.
So do you view, let's say Bitcoin hits $1 million, you think like altcoins, rising tide lifts all ships kind of effect?
Not all ships, the best ships.
The best ships.
There's ships with too many holes in them.
Yeah. Yeah. And those holes are like,
everything.
VCs
liquidity, token, like pre-sales, product market fit, your ability to list your reputation, the amount of customers that you have. It's a lot of shit. The issue with a lot of crypto projects is, imagine Facebook 2006 when it just starts. They launched their stock that next year. Is Mark Zuckerberg ready with such an infant company to be managing a stock, to be managing investors as well as a company and profits? Very difficult for a CEO to do all of that. Today, in crypto, that's what's happening. You have people managing a chart, managing investors, and simultaneously trying to build a market fit product that onboards customers and that is profitable. Look at what's taking place with fucking Polkadot.
Yeah.
They're going crazy because they're like, oh, we thought that this was going to be the future, but nobody's using it. Going to zero.
A lot of projects, 99% of projects
going to zero. So does it lift all boats? Maybe during a bull run speculation.
Yeah.
Long term, not at all. But there's a couple monolithic ecosystems that I think are going to outweigh everything. TON ecosystem, Bitcoin ecosystem, Ethereum ecosystem, Solana. Right now, these are the 4 heavy duty players. You have Base wanting to get involved. You have Linea wanting to get involved. You have AVAX wanting to get involved. These are all competitors. They all have a chance. But once again, it's the path of least resistance. Do they have Phantom, right, readily available in Jupiter that you can hop on and swap? No. Okay, well, what is the path of least resistance to acquire a user? The mobile. So then I look at TON. Okay, well, it's very simple. So when I look at these chains, when I look at these products, I look at demand. I look at how aged they are, because age is important, because it tells you if something has the ability to stand the test of time. And do they have traction? Traction is it a path of least resistance for users to come on board? And is the usability of the product something that's enjoyable? Remember last bull run, all these metaverse worlds. Yeah. In order for you to do any transaction, you would have to sign your wallet, that transaction, any sort of movement. That's not scalable. That's not doable. So the tech also needs to advance in a way that adopts normies. And any place that now has access to adopt normies just happen to have kind of like the OG cryptos attached to them: Bitcoin, Ethereum, Solana, AVAX, TON, things of this nature. Outside of that, speculation and gambling at the highest level. And then the final sector, the retail Wall Street, meme coins, which I think are the only asset that is completely uncorrelated to crypto and the markets in general. You have the ability to experience massive gains in memes when there's a bear market, when the market is down. I mean, look at PEPE. When PEPE first took off, I think last year, we were still bear market. Yeah. And it hit hundreds of millions of dollars.
I remember finding that at like 50 mil. I bought my first batch at
I think I saw you post about it.
Yeah.
You made a video about it, right?
Yeah. I was on live stream because I used to do live streams, and someone in the comments like, check out PEPE. So I like went on. I'm like, okay, I'll just buy some. And I did it live on stream. I just bought some. And then, I mean, I obviously took profits as it was going up. But
100x later.
Yeah, it was like a 60, 70x. I'm still holding a like bigger position than ever. It's my biggest position.
But it's wild.
Yeah.
It's a meme coin.
Yeah, it's crazy.
But you look back at it in retrospect, and it makes sense. It's the number one character of 4chan. It's the number one character on Reddit. It's the number one character on X. Okay, this is all attention. The guy that owns the IP doesn't really take care of it, doesn't give a fuck about it. It's already pretty much like a household internet name. Okay, we have all this momentum, energy, and attention. Let's just add a token to it so that people can speculate on it. Whoever did it is a G.
And there's this additional element. I don't know if you remember, but there was FUD in the early days where the 100%. Team had a fight, but that dumped a lot of the team supply. And then once people realized a lot of that was in the market, it became like the community's coin because there wasn't that sell pressure. And that's like a powerful narrative, right? When it's like the community and they just pumped it.
Yeah. I mean, that's how I'm seeing the market, man. I think actionables is get involved. Actionables is join communities. Actionables is understand that this is here to stay. And it's not about gambling. If I'm like, hey, buy this coin, that coin, you're not going to become a better G if I put in a couple grand in your pocket. That's not, no. You become a winner by identifying trends, by identifying narratives, and by identifying winning teams. And nobody can do that for you except yourself. Even you listening to the things that I'm saying, go and research them. Spend 4 or 5 hours before you allocate your hard-earned money into different plays because you could lose it. And once again, most people in the markets, and we saw it last bull run, dude, people got fucking demolished. You don't think another Luna is going to happen this bull run? You don't think another BitConnect is going to happen? You know what I mean? Take you, Mt. Gox, BitConnect, Luna. What's next? Something's next.
I lost a lot last bull run. I made a lot and lost a lot. And your first bull run as well, you said you made over
160x and lost it all.
160x.
I went to debt.
So, but sometimes you need to go through that stuff to like understand like how to actually play the game. And I feel like I've really changed my investing style since then. I think, you know, when you go into crypto, you maybe a little bit blind, too trusting of like the promises and the hopes. And that's really what I think has solidified meme coins this cycle. People don't trust that status quo anymore, and they want something different. And that's where
they don't want to be lied to, and they want to buy something that they understand. When you buy Dogecoin, you know what you're buying. When you buy Brett, when you buy Shiba, when you buy FOXY, you know what you're buying. You're buying a meme coin. That's it. And you're riding the momentum if the project has it, and you're riding the narrative if the project has it. High risk, high reward, baby. Name of the game.
If you were just coming into crypto, would that be your number one focus? Like, obviously, after you understand the basics of how the market works, Bitcoin, Ethereum, would you dedicate most of your time to memes or?
100%.
Yeah.
Everything in the crypto space is a meme.
And that's where you're focusing your time as well?
I'm enjoying it, dude. I'm having a great time. It's fun, dude. And it's like, I don't have to read all these bullshit white papers about this imaginary tech that's going to roll around. Any of the high tech stuff, I'm already most likely allocated and invested into the likes of Monad, and I have a couple other investments that I've really deepened that are rolling out in the next couple of years, but they're not out to market. They're not ready to roll.
Do you buy the L1s as well? Like, obviously, Ton, Solana, like.
I have Ton, Solana,
Ethereum.
Bitcoin, Ethereum, and leverage long on AVAX just because I think it'll pump with everything else, and leverage long on INJ.
I think what people need to understand as well is like something like Bitcoin, Ethereum, Ton, Solana, you can probably hold that with like quite a long-term view, like even 10 years, obviously taking profits in bull runs. Whereas the meme coin game, that's a you got to treat it differently.
Days, weeks, months.
It's in
maybe out. Months if you're a G and you pick something that's crazy and the team works.
Yeah.
Weeks on the average, and days for the most part.
Yeah. And lastly, how do you go about finding
and hours for the old G-gens? Getting, once again, you want to find
how do you go
memes?
about finding memes?
Teams, trends, and narratives.
Yeah.
Why am I so bullish on Brett, for example? Well, because PEPE did well, and it's part of this narrative of Boys Club. So it's the narrative. So, well, what's the trend? The trend is this thing's already at 1.5 billion. Brett. This other thing's at 3.5 billion. PEPE. Okay, well, what's the narrative? What's the bet? What's the speculation for it to continue playing the same trend? Okay, well, what's the team behind it? What's their track record? Okay, they have a solid team. All right, sounds good. I'll put some coin in there. It's pretty simple. Sometimes I win, sometimes I lose.
Yeah.
As long as I win more than I lose, it's the name of the game.
You only need a 51% strike rate to make money
over an extended period of time. You know, I was listening to a keynote by Federer, and he said, you know, half of the serves, they hit the net.
That was such a good.
Half of the serves are out.
That was such. I watched that as well.
So it's like once you understand it's a game of probabilities, as long as you win a little bit more than you lose, and you understand how to cut your losses.
Over Federer's career, he only won, I don't know the exact figure, but I think it was like 54% of points. He won 80% of full matches, but only like 50 something percent of points. And it just shows like it's small margins, but consistently over time, that's how you become
compounding
successful.
Effect, brother.
Yeah. I think that's a good way to wrap it up. Thank you for joining.
Thanks for having me. I appreciate it. Look forward to part two somewhere in the metaverse.
We'll do a spaces as well or something
let's do
that.
Yeah, I'm down.
Let's do it.
Hashtag Bitcoin to the moon. Why not? Fuck it.
Make sure to subscribe and we'll see you in the next one. Thanks, bro.
Good time?
Appreciate it. Yeah.